I heard about Bitcoin all the way back in 2012. It took a while to really comprehend how big this is going to be. So in crypto, you just have one guy working in a basement. Again, I'm referring to the founder of Uniswap here, like genius at work.
It's Hayden.
Yeah. Yes.
Hayden we're talking about.
I went to our compliance function in London at Goldman Sachs and told them, hey, can I buy Ethereum? And they were like, what is Ethereum? So I sent them Vitalik's blog post. I sent them some articles. And then they told me, well, it kind of sounds shady and a bit like gambling.
We are in Dubai with Crypto Newsy and in partnership with Global Blockchain Show, taking place here in Dubai in December. And today I'm with Alex from Binance Labs. Alex, welcome.
Thank you. Pleasure.
I hear that you've been at Binance Labs since the early days. So one thing is like, obviously, why join this industry? Tell me where you're at, and then maybe dive a little bit into like why Binance Labs specifically.
Yeah, sure. So I guess to answer that question, we'll have to go back a bit more into where I started just after graduating university. Mm-hmm. So I joined TradFi initially. That was my very first job after multiple internships. I started at Goldman Sachs in investment banking, did the whole thing, like 4 years in London, working 100-hour weeks. One thing that I realized very early on was that TradFi, as we call it now, is a very slow-moving industry with lots of restrictions, lots of compliance overhang. What that meant is that, back in 2014 when I started, we had almost like a zero interest rate environment, which meant that you get paid quite a lot of money in terms of salary and bonus, but it kind of sits in your bank account doing nothing. So very unproductive use of capital. So that's on one hand. On the other hand, because of compliance restrictions, you're not able to invest in pretty much anything in TradFi. So no equities, pretty much no bonds. We're allowed to do some commodities like, buy oil, maybe gold, and all that spectrum of assets. But they are relatively boring. And, as someone who you just start working, you have a bit more risk appetite.
Yeah.
So obviously crypto comes to mind straight away. And I did not start investing in crypto straight in 2014. That would have been obviously much better ROI. But
How did you hear about it?
Well, I knew about it for some time. In fact, I heard about Bitcoin all the way back in 2012. It took a while to really comprehend how big this is going to be. But in terms of actual deploying own funds, that took maybe another 4 years or 5 years since I heard that. So 2016 was my first time when I bought a crypto asset.
Okay.
And I did it on Coinbase. Back then, Coinbase had 3 assets listed. For the most part, that was the case for a long period of time. So they had Bitcoin, Ethereum, and Litecoin. And that was it. You had nothing else. Then Binance came along in 2017, and I can cover that a bit more. But just to go back to where it all started. So I went to our compliance function in London at Goldman Sachs and told them, hey, can I buy Ethereum? And they were like, what is Ethereum? So I sent them Vitalik's blog post. I sent them some articles. And then they told me, well, it kind of sounds shady and a bit like gambling. We don't really have any restrictions buying this. And we do have a lot of people that actually are gamblers. They play poker professionally. They go to casinos. They do all sorts of other, blackjack, all sorts of other gambling activities. And they were totally fine with it. They just said, be careful about how you use your funds, because you might, be working all of this time and actually invest in something very risky. So that was it. I still have the email that the compliance replied saying, sure, go ahead. It's our money. You can lose it. Do whatever you want. We don't have any restrictions. So yeah, I went ahead, bought Ethereum, Bitcoin, Litecoin. Then the ICO started, the whole boom. I was working long hours. Meanwhile, I was also watching these ICOs, launches live on my phone while being at the desk. So I've been engaged with a lot of different projects across the board in 2017 when the whole ICO phase took place. I also managed to create or come together with a few other people at Goldman and created our internal crypto club.
Yeah.
Which was very much frowned upon when you talk to some more, elder investment bankers.
Right.
They thought this is crazy. They even called, in some instances, us stupid. Because they get all their information from headlines on Bloomberg, on FT, Reuters, and so on. And those are not the most positive, especially not in 2017. And the few people that I know, they did very well. We had some people that left and built some interesting infrastructure, connecting TradFi to DeFi to some extent. Some people built really cool stuff in the DeFi space. They've done well. Some of them are semi-retired now.
Of course.
So it pays off very well. But I think generally what really attracted me to crypto is the fact that this provides a clean slate of really anything, innovation, experimentation, really trying to do iterative approach to building stuff as well, which we don't have in any other industry really. So first and foremost, I think DeFi was really the thing that clicked very quickly. Because, being in traditional finance, you understand the limitations of cross-border payments, of, fundraising, of everything really to do with any sort of traditional banking rail and traditional, financial markets. They're very siloed. It's very hard to actually scale them across different geographies unless you have a lot of initial capital to go ahead and really deploy it big time. So DeFi solves all of that. We've seen the advent of new ways to price things. For example, automated market making is something actually that has been around for some time in the academic field, but you could never have seen this pick up in traditional finance because there was a professor somewhere. And this is actually a real thing. You can Google it. Robin Hanson, he proposed something like an AMM back in the 90s or early 2000s. And it was just like an academic paper that was shelved somewhere. It was very interesting to read, but no one actually could build it. You couldn't go to like New York Stock Exchange and say, hey, let's do this AMM pricing mechanism for, price discovery of Google stock. You'll probably get shown the door immediately. But then, Bancor came about, Uniswap came about, they built it, launched it somehow. People believed in it.
For context, why was it not possible and with the crypto it is?
Well, because in traditional finance, if you want to replicate, imagine you take the entire order book model, which has been around probably since the 17th century, and you just say, let's scrap that and, try and replace it with this new crazy thing, which, works on paper, kind of mathematically, you can prove it. But we never actually tried it in real life. So let's just put, billions at risk and
I see
how it works. I guess if it sticks, it sticks. If not, then, well, sorry. So no one does that in traditional finance because, first of all, the way traditional finance has evolved is across centuries of, iterations, very slow moving ideas and initiatives. So with order books, which you've had for a long time, it was literally like a book where you write, buys and sells or bids, and asks. And then that was done manually. You had like an open market where people are shouting at each other. Then we had the advent of electronic trading, and you put that kind of in software format, and that's how we evolved to where we're at right now. So starting from the 17th century, where I guess it was the Dutch East India Company that had the very first method of doing this type of price discovery, which we now call order book based markets, to early 2000s, where we had this more mathematical, very theoretical approach, which was implemented in crypto. So in crypto, you just have one guy working in a basement. Again, I'm referring to the founder of Uniswap here. Like genius at work.
It's Hayden.
Yeah. Yes.
Hayden we're talking about.
That's right. So he just needs coffee and a laptop, and he produces, something which took in a parallel, industry, multiple centuries to evolve, and he can do it like in a couple of months, in a few months. And you launch it and see how it works, and people have a lot higher risk tolerance, and they can actually play around with it and see how it evolves. And then we got the next iteration of that and the next one. So I think we're just getting started, to be honest. And this is really what attracted me to this. I was really fascinated about the fact that you can do all of this like in a matter of months and have it all, line up in a way that you cannot do in any other industry, not even in traditional tech, by the way.
Yeah. I mean, like the nature of risk taking seems like to be like a huge component that really attracted you to the industry.
That's right. Yeah.
But the fact that, and I'm going to go back to it just briefly, that you were like in the setup where like you're at Goldman Sachs and you find these things and you have like the conviction to actually not just want to do something about it, but you actually communicate it to a point where it was effective and you got approval to go forward. That is really amazing to me, mostly given that you were in London, which is it's much harder than if you're in the US. So that's really interesting. Is there any other pivotal moment? Because you're now like Binance Labs. Like how do you get to Binance Labs? And was there any other pivotal moment like that where you have conviction and you speak on it, and then something of that scale happens? Right.
So I guess the next step would have been to join this full-time, right? In a full-time capacity where you don't have any other focus other than being in crypto day in, day out. So yeah, the next sort of iteration of this conviction buildup was around 2020. So during COVID, it was very clear that crypto is not just not going away. It's not just not going to die. It's actually going to be something really big, because we actually had a bunch of interesting things that were not covered as much during that period, which was how do you actually support a big mass of people, get funds in their hands, while not being able to rely fully on like traditional banking rails, which in some countries actually shut down the branches. People can't go and access their funds. They might not even have internet banking in some countries. So crypto is literally the best use case to do payments. I think we're just getting started. Again, there's a big push to bring on a lot of the old, very slow, very expensive payment infrastructure onto blockchain. And everyone's work, including, Binance has a payment solution. There's Visa, MasterCard, you name it. Stripe just did a massive acquisition.
Yeah.
Stable coins are obviously at the very core of this. And during COVID, it was really clear that, an on-chain representation of a dollar is not just a simple artifact that you can use for trading on decentralized exchanges where you crystallize your losses or gains. You can actually build really big payment systems with it as well. So at that point, I realized that I really want to do this full time. So I started really going back to my network, talking to a lot of different institutions, funds, venture capital allocators, trying to really get a pulse where I would be best suited, because crypto is not a very well-defined industry. As such, the roles that people have are also very much developing. So unlike traditional banking or private equity or even traditional venture capital, we're making stuff up as we go along right now. And I always say that the decisions that we're taking right now as an industry, for example, in crypto or Web3 VC, are going to impact the industry down the line. So how we're thinking about deal structuring, how we're thinking about, pricing risk and valuing startups. This builds a historical record of things, and it kind of creates a path-dependent future where we cannot really go back and undo things. So if we think about it in the wrong way, or we push for the wrong approach to think about tokenomics, token issuance, all of these things that we just make up along the way, is going to impact the industry. And because of the accelerated way that crypto works, we're going to get there faster. So we want to actually think very thoroughly how we get things done. We actually put in place a framework that has a lot of thought and logic behind it. And this is really great for anyone who wants to come and work in crypto, because they can participate. They can actually have a big impact. It is like the same thing happened in traditional finance. Let's say in the 80s, when bonds came about, and this high yield bond issuance was the frenzy of the time. A lot of things were done wrong, especially like with all of the junk bond market. But a lot of the things actually came out being very innovative, very interesting as well. Same thing happened in late 90s with the way the whole option derivative market started being repriced as well, using mathematical approaches. Black-Scholes, they just published their work. They got a Nobel Prize for that, and people start using that, and that unlocked a massive new market that is now worth trillions. Likewise, now we're doing the same thing, where it's not just an abstract thing that we're calling it decentralized finance or CeFi or DeFi. This is the cutting edge of crossover between finance, technology, general economic theory as well, and all sorts of other social aspects, and how you actually build communities and how you incentivize massive amount of people to work for the same goal. We never had something like this before, and therefore the impact of what we're actually funding, doing, supporting is going to be huge.
Alex, I could talk with you for another 3 hours. They're signaling me to end this. You'll definitely have to come back.
Sure.
For everyone watching, where can they find you?
I'm on Twitter, handle @Odagius. You can also find me on LinkedIn, just type my name, Alex Odagiu, as well. For anyone who attends some of the larger kind of conferences, I tend to go to where I guess you are as well. So Token, DevCon, ETHCC, I'm usually there trying to meet founders, really interesting thought leaders, and people like you as well.
Alex, thank you.
Thank you very much.